Betterment's making a big splash again with a new portfolio from a crypto standpoint that I'm going to be going over with you today, as well as how to turn some of that money that you may have sitting on the sidelines into profit as we look into what the Betterment portfolio is doing and a way to make you money. First off, what is Betterment? For those of you who watched the channel for a long time, you've known that I'm a big proponent of Betterment. Not just Betterment, some other robo-advisor tools, but Betterment's one of the largest independent investment advisors in the US that manages roughly around $80 billion. They help customers gain exposure to crypto, long-term investing, whether it's equities, stocks, bonds, savings accounts, even retirement accounts like IRAs, Roth IRAs, SEP IRAs, etc. If you look here, one of the portfolios we're going to go over today is what's called the Universe Portfolio from a Betterment standpoint. And all that means is the new portfolio they brought out has Ethereum, Bitcoin, and a little bit of cash in there. Now, how does this differ from what they were doing before? For those that have been keeping track of Betterment and what they have been doing from a crypto perspective, you'll remember they bought a company about a year and a half ago that they were trying to blend into the core Betterment product. That integration is now complete, and you're able to go into Betterment and actually invest directly without having to go through a third-party broker. Crowdfund Insider posted this article last week on the 17th that went over what exactly happened. So the portfolio that they brought out, like I said, is Universe, and this provides the two largest cryptocurrencies, Bitcoin, Ethereum, and you're able to directly invest into those. You can also they have two other options, the sustainable, and then if you want to create your own, you can do that as well. But they are looking to provide some of this retail investor exposure. So if you don't want to buy the coins yourself and you just want to hold those inside of Betterment, you can do that as well. I think it's more of an autopilot easy button for those that do want to continue to invest in crypto, but don't want to own their own keys, don't want to buy it through a separate brokerage. There are some things I'm going to go over as well. It's not all peaches and cream. There are some things that you need to be aware of. They also talk here and say, they're the largest independent online financial advisor using automated technology and mixing that with human expertise. Yeah, there's some things you can do from a Betterment perspective. If you want that more hands-on approach, you can get a call set up with one of their financial advisors. Now, what does it look like? I'm going to move over here to the actual the website. So one of the big things Betterment continually talks about is diversification. And it's not just diversification from a crypto standpoint, it's diversification across the entire portfolio. What does that mean? It means that they're looking at your risk factor, your risk parity, how long you plan to invest, what you do when markets are down, what you do when markets are up, and then making a plan for you in order to see some appreciation on your capital and some gains. Like I said, they do have diversification here. The resources they have the whole crypto library. They use a third party, Gemini, which I've talked about before, in order to make these trades. And there are fees that are associated with that. I'm going to go into it. The automation, the guidance, the pricing. You do pay a 1% annual advisory fee. That's the first thing I'm going to talk about when it comes to fees. You also pay a transaction fee to Gemini every time you make a trade. And those trade prices in terms of percentage can move based on the market. So sometimes it's a little lower, sometimes it's higher. Spot pricing when it comes to crypto is important to remember. It's not like trading a fiat currency like a euro or a dollar, where it's pretty much pegged and it's usually very stable and may move a little bit. These are the three different types of portfolios they go through. I'm going to click over into this one. And as you can see, you do have the two holdings and it actually tells you who it's for. So if you're looking to invest in the largest crypto and you want to have more of a laser focus on just the two biggest, Bitcoin and Ethereum, you're able to do that. You don't have an ability yet to adjust to say, okay, I want 50% in Bitcoin, I want 50% in Ethereum. You don't have that ability to do that yet. Now, I will say, crypto somewhat came down over the last 12 to 18 months. I think it's going to continue to go back up as the dollar continues to get shredded with inflation and money printing, especially going into 24. That was actually one of the biggest reasons I invested in this portfolio earlier on, about 18 months ago, with their third party, with Gemini. Now that they've integrated it, I'm going to actually be investing more into just these two. So I'm going to show you, go over here, and I'm going to show you my portfolio. So my portfolio over here is, I have a recurring transaction setup that goes in every other week. I put a little bit of money in and it just goes into Bitcoin and Ethereum. Now, a couple of the things that people are potentially going to ask, does it continue to market weight it? So, you never become over 70% or 30% on Bitcoin and Ethereum. The answer is yes. They try to keep those percentages in line. And what does that mean? It means that if I start to drift one way or the other from a Bitcoin perspective or an Ethereum perspective, it tries to keep me in line. Right now, I've got 68.43% in Bitcoin and 29.38% in Ethereum. They'll continue to move that around a little bit as the markets, as more money starts to come in, but they'll try to keep that balance there so that you're not overweight one asset or another. I mentioned fees. So you do pay a 1% annual management fee on the total balance, and then you pay 0.1 up to 0.15 for each time you trade. So I do want people to understand there are higher fees associated with crypto. One, because it's more volatile, and two, they're having to go out to a third party like Gemini to actually make those trades. What will the platform look like in a few years when they're maybe they buy Gemini, maybe they bring it in-house, maybe that helps cut the fees down. But right now you need to understand what the fees look like, what the fee structure is. It's very different if you're a traditional Betterment customer and you're paying that 25 basis points on assets under management. Understand that this goes up 4x to 1% plus the trading fees associated with that. The allocation here, they do use a blend, market cap weighting and risk parity. I could talk about that earlier to provide returns and reduce risk. One of the things well, actually, let me back up. The drift here as well, I talked about that a minute ago. I'm not too far off from a drift perspective since I just opened this account. This says launch date 7/17. I invested last week when it launched. But one of the things, since we're talking about features and functionalities, a couple other things you need to know about. So are the crypto assets insured? The answer is no. So if you're looking for that FDIC or SIPC protection, you're not going to get that with crypto. So understand that as well. The other thing that you're not going to be able to do is, and this is probably the biggest one, there is no tax loss harvesting or tax coordinated charitable donations cost basis calculation for crypto. So I use tax loss harvesting on all my equity funds. I use tax loss harvesting and basically everything I do, even if I have to calculate it manually and sell out of positions, I still do it because it helps offset my losses and increase my gains. When the market's going down, I can help write off some of those losses, and I don't take such a bath when it comes to the downside. You do have tax reporting at the end of the year. You'll get a 1099, or you will get a statement that talks about how much profit or loss you have, but you don't get any tax loss harvesting. So if you're used to that, that's something you need to be aware of. From an insurance perspective, like I said, no FDIC insurance, and you can only do an individual taxable crypto. So you can't do a joint, an IRA, a trust, an LLC crypto account. You can only do an individual. So for those that have a trust, or you're looking at doing a joint or an LLC or something like that, you'll need to be aware of that. Also like the fact that there's no minimum. You can do a portfolio basically with $0 or $1. So you can open it up if you really want to see what that looks like. Withdrawing the cash, so what's going to happen is they're going to sell out of the coins that you have, it doesn't really matter what secured or what basket you have of crypto, and they're going to sell that out, take their fees, and hand you back cash. You are not going to be getting crypto or Bitcoin or Ethereum or any other asset that you have in a crypto portfolio. You're not going to be getting those coins back yourself. You will only be getting either an account statement where you can move the money into another account, or they can send it to an ACH account where that will be in the denomination of the country you're in, whether it's a euro, whether it's yen, whether it's the dollar, but you will not be getting crypto back from this investment. I think that's important to know that, one, you don't own the crypto yourself, and I've talked about this before. I have several videos talking about if you don't own the keys, you don't actually own the crypto. I understand it might be a little counterintuitive for myself to say that I'm investing in Betterment crypto. I also, what I've said before and what I'll reiterate again is, I also have crypto that I store locally on a drive, that I have on a key, that I make sure is not connected to the internet unless I'm moving coins around, doing a swap, or selling out. This is more passive, and this is a way to reduce risk in the dollar and just diversify my bigger accounts even more. But again, you don't own the actual crypto, you don't own the coins. Be very careful of that. If you're trying to buy crypto and you want to buy individual coins, you want to hold those and stake those, I've got several videos and I'll put either here or up here, depending on where they put it. You can click on it and it'll walk you through actually purchasing crypto, holding it, staking it, and then selling it if that's something that you're interested in. Now, let's go look at the holdings of what they've got. So they do have other portfolios. So if you are interested outside of Bitcoin and Ethereum, they do have the Universe portfolio where you really kind of get a little bit of everything. Predominantly Bitcoin, a little bit of Ethereum, Litecoin, Bitcoin Cash, Chainlink, Doge, which was popular, Sushi Swap, Solana. I'm a pretty big fan of Solana. If you're interested in some of these, you can invest in a bigger portfolio. And then for those that are interested in more of the sustainable, which I think is that's a little bit misleading because crypto in all ways does burn energy. But if you're interested in that, it uses more Ethereum, Chainlink, Uniswap, ones that are more proof of stake rather than proof of value versus proof of stake, which tends to be a little bit less mining from a mining rig. All right, so final words of encouragement, final words of caution. One, if you're looking for an offering that's automated and you're looking for an offering inside of Betterment, if you're a current customer, I think it's a good way to go. If you're looking for reduced fees, this may or may not be the best place to go. If you're looking to actually own the coins, it may not be the best place to go. And if you're looking for tax loss harvesting on assets, this may not be the place to go. So who is this for? It's for someone that wants a very seamless and easy way to continue or new to invest into crypto and very hands-off. If you're who this is not for, this is not for those that are more advanced. This is not for those that want to hold coins for the long term and actually stake those and earn money. So I think there's a place for this. I think that it's a good offering. I like that they're continuing to advance on this. And make it more interesting. They're adding more features to it. I would imagine my predictions for 24 is they'll add more portfolio options to Betterment from a crypto standpoint. They may buy a coin holder like Gemini to help reduce those fees, because as of now, 1% of assets under management plus trading fees can get very expensive. I would advise everyone to put no more than 5% of their portfolio into something like a crypto investment. It doesn't have to be Betterment, could be something else, but just understand the total amount in your portfolio that you're willing to invest, understand your risk ratio, understand your timeline horizon, understand the drift parity, all those things I've talked about in some of my other videos. So if you don't understand what some of those are, check out some of my 101 financial videos to walk you through that. But as always, don't forget to design your financial freedom. Take care. Bye-bye.